All right, let's get started. All right, so I'm Ron Sweet at UTSA for, I think I just finished 25th year. So my 26th year. Retired from USA in 2009. So I was teaching here and working there. I don't know how I did 2008. I was teaching 6 classes here and head of equities at USA in the middle of the financial crisis. So I don't remember that year other than I didn't sleep much. Pretty rough year. I was telling my other class, if you're in finance, you're in a real exciting field and extremely stressful field. You better love it, because when the stress hits, it is not a fun job. It's pretty stressful. It's pretty horrible. I finished head of equities at USA. I'm not an equity person. I don't like equities. I like fixed income. But I'm teaching this class. John's teaching the fixed income class. So I said, I'll focus on stocks. He can focus on fixed income. So we'll see that. I mean, I was head of equities, which is funny because my department, before I got that job, Stuart Wester was retiring, and one guy in my department says, "Hey, Stuart's retiring. You could take his place when he retires." And the whole room burst into laughing because they knew. It's like, "Oh, you'll never take that job. You hate mutual funds. You don't like stocks." And sure enough, a month later, I was working there. I do like stocks. I like the math of stocks, and that's what we're going to do is security analysis. This class used to be very traditionally taught. And then I called the head of department. I said, "Can we have a class where we let students really get into what they're actually doing? It's going to be a tougher class. So this is somewhat of a premier class. So if you're in here, you know, you're the upper crust of the finance students here, but a class where we can really show off our students." And so the idea of this class is that you actually do the job of security analysts. So we're going to take what a security analyst would typically do in 2 weeks, and we're going to spread it out over 3 months, because you don't have 60 hours a week to do. We're going to spread it out, which is real key, is that you spread it out. All right. I saw one student this summer. He did really well in this class, and he was late on everything. And I thought, there's no way he's going to finish, but he got it all done. It got him a job too. That's one thing this class, more than any other class, gets students jobs. If you dedicate it and get the paper done, you have something very few students have to show, because most professors will not grade what I'm grading this semester. So I'm glad it's a small class. This is a lot of grading for me. But if you can put it together and get a really good paper, I've had so many stories. I might even show you some stories of students that have said, "This class got me a job." I remember the first story I got, a lady taking this class, really strong student. She was working at USAA and she wanted to become a security analyst, but they had a job on the board, but they needed 3 years of experience, and she had just started. And she said, "Can I apply for it?" I said, "Yeah, go for it. You're a really strong student." So I emailed them and says, "Please just interview her. I know she doesn't qualify, but just interview her." So they interviewed her. She's doing really well in the interview. And then she brought her paper up and handed it to them. They hired her on the spot. She wasn't qualified for the job, but they hired her on the spot. So I called them afterwards and said, "Yeah, we saw that paper and this is what we need. So let's just hire her." And I'd already told them, you know, she's a really, really good student. And I've had several students that have had those kind of stories. So, so it is a lot of work. It's a lot of work, but if you spread it out, it's probably not that much more work than any other class. You don't have exams, so you don't have to study and memorize stuff for exams. So it's a paper writing, which, guess what you do as a security analyst? You write a lot of papers. So I say it's 9 papers. It used to be 10 papers, but I've combined some papers. The first 2 papers I'll combine into one. I used to split it, and I'll talk about the split a little bit. I will have them do though in chunks. So like the first paper will be due, and then the next 2 papers will be due together, or maybe next 3 together, then the next 3, and I'll give you plenty of time. Now, I give you plenty of time, which is disastrous for some students. If I give you plenty of time, that means I don't have to worry about this class. I can put it off for several weeks. You can't do that with this class. So this is a class where you have to be putting at least 5 hours a week into it every single week. You've got to spread it out. So the student, I saw him this summer up in Chicago. He's doing great. He got a job because of this paper, but he was a procrastinator last second. He could do, I've had 2 or 3 students that can do that really good paper last second. That's a horrible life as a security analyst. You can't do that in the job. it's a weird job. I remember I was a security analyst. You sit there for 4 or 5 weeks and no one says anything to you. So if you wanted to goof off for 4 or 5 weeks, you really could. The problem is your boss does come to your desk and ask what you've been doing the last few weeks, and you better have something substantive. So don't procrastinate. If you procrastinate, I'm going to try some things that try to keep you from procrastinating by doing some smaller team type of things that try to keep you going. But there's always this class, I give a lot of incompletes, and most incompletes become Fs because they just can't get all the papers done. It's tough, but if you spread it out, it's not too bad. It's a lot of reading. It's a lot of writing. One nice thing about it, if you can get this, the register, take some of the stress off. The hardest paper is by far the very first one. And they do get progressively more straightforward. I'm not going to say easy. None of them are easy. The last 2 papers are probably the easiest by far. So you start off the hardest. The industry analysis is the first paper. That's really tough to do because I'm going to give you some template like things to do. You need to do these following things, but every industry is going to be very, very different. So I'm going to walk you through those. So you have 9 papers, each worth 1/9 of, and really it's 8 papers and an executive summary. And you'll finish with the executive summary. And the executive summary is the one you want to really focus on the formatting. And we'll talk about it. Are y'all familiar with buy side and sell side? Anybody know those? Give me a quick definition. Buy side, sell side. Which side participates in company conference calls? Sell side. Which side publishes fancy, glossy analysis? The sell side. The buy side, I can't really do the buy side. There is no, you do whatever you want to do. I've interviewed a bunch of people on the buy side, and when I ask them, the question I always ask for an analyst is define a good company, define a good stock. On the buy side, they open up their briefcase and it's just a chunk of paper they bring out, and it's charts, it's all messy. The sell side is these fancy, glossy reports. That's what I want you thinking more on the sell side. I want you have something that looks really, really professional, something that you could publish. So you want it, you want something that looks good. That gets you through the human resources people because they're not going to read your paper. But if it just looks good and fancy, that's good enough. And then you got to make sure the exec summary looks really, really good because portfolio managers will read that. They'll probably flip through the rest. They're not going to read 50 or 100 pages, whatever you end up with, but they will read that executive summary. So from putting this on LinkedIn, you do need to make sure, you've got really good format. So put that in your notes. Format is extremely important. Stop and think what your format's going to look at. We'll look at a few example papers so you can see, and you'll see some of you've had before. You're going to recognize that format I like to use, but you do want it to look really, really good. I do check attendance. Why do I do that? I had one professor said, I don't check attendance. I'm not their mother. And I think she completely missed the purpose for checking attendance. I check attendance because I hate to say this, I don't like unengaged students. They just irritate the life out of me. There's people that are finance majors that should not be finance majors. They're already bored to tears with finance and they haven't even started their career. They don't come to class. They don't participate. They don't even watch the videos when they don't come to class. I've discovered if I check roll, a lot of them will never take my class. So that's my entire goal. It's just that those people won't take my class. So that should be a problem for you. If you come to all the classes, you get a bonus. If you miss a few, it doesn't hurt you. If you miss 20%, yeah, it starts really hurting your grade. You're better off just dropping the class anyway. You can make up some classes by watching the Zoom videos and submitting your notes, because I know emergencies come up if you're sick, those kind of things, but you can't do that with 5 classes. You can do that with 2 or 3 classes. So if you have any special issues come up, that's fine. I do want to do some group work in here, and that's not going to work really well if we have people on Zoom. So I will record them all. I will put them all out there on YouTube so that you have them, especially for more of the technical classes where we're doing either a forecast or doing financial analysis. You can walk through that very, very closely. And then if you do the instructor survey at the end, you get some points. I was reading last semester's and it's great professor, loved the professor, horrible professor, avoid him at all costs. So I'm either loved or hated, nothing in between. So, and that's because a lot of students just don't like to write. And I don't know what to tell a finance major who doesn't like to write. That's almost like a, you know, someone who's going to be a journalist. I want to be a journalist. I just don't like writing very much. It's what we do. We write. We got to convince people to make the decision we're trying to get them to make. Now, this is a breakout of the papers, so let's kind of walk through them. So, security analysts. So, if you look in the industry, there's financial analysts, there's security analysts, there's advisors, investment advisors. So, a financial analyst is usually the corporate finance side. You're working inside the company, trying to make the company better. Security analyst is someone who's going to buy a security, a stock or a bond. We're focusing in on stocks. So, security analyst. There's the buy side and the sell side. The sell side works for investment banks. They're not allowed to buy any stocks, which is a big downside of the sell side. You shut your portfolio down, but you make recommendations. You're really a consultant. You're the one out there that knows the company backwards and forwards. I remember when I was a security analyst, the sell side people, they just blew me away. Just their knowledge, extremely smart people. They usually follow very, very few companies. 5, 10, 15, 20 companies, they know them backwards and forwards. So they're not really security analysts, they're investment bankers, but a security analyst on the buy side, they're making a recommendation to actually buy a stock in some portfolio. And so that's what you're going to play the role of a security analyst. You want to start off by understanding what industry your security is in, and then understanding what drives that industry. Now, I'll give you some things that you hopefully have done in some other classes, but if you haven't, you'll definitely do them here. How many of y'all have done a Porter's analysis? I think is that all of y'all? You've done what, capstone maybe, or buyer power, seller power, industry rivalry? That all sound familiar? So Porter's analysis is very, very, very heavily used on the security analysis side. So you want to make sure you do one. We'll talk about it. I have a very special way you're going to see on paper 1. I want you to actually use Porter's as your organization for your paper. And some students struggle with that. They'll talk about all the stuff that has to do with buyers, and then they'll do their buyer power. So it's like you got it in 2 places. Buyer power, just put everything related to your buyers in that section. Everything related to suppliers. So suppliers could be, you have to buy some raw material. You're doing electric vehicles, so you need cobalt from Congo, but you also have employees. So all those employee issues can go under supplier power. So we'll do Porter's 5 forces, and then the generic strategies, I'll actually talk about how you can work those in as well. So if you haven't had that before, you definitely want to know what that is so you can talk through it. And I do want some macro factors. To me, what is a macro factor? It's usually an economic factor, but it doesn't have to be. It can be economic. It can be demographic. There's all kinds of things. I mean, if you're doing electronic, let's say you're doing Valero. All right, Anthony's doing Valero, so their big risk is electronic vehicles. So a macro factor would be what percentage of people are buying electronic vehicles versus gas powered, or what's the cost of electronic vehicle, or what's the benefit. So what I'm looking for with macro is you can talk about its history, where it is today, and some forecasts where it's going in the future, and then how that drives the firm's business. So if you're doing Exxon, it can be oil prices, obviously, natural gas. I saw natural gas prices are ridiculously high. They were at $2 for what? Forever and ever and ever. Now they jump back up. So that could be a big factor to look at as well. So that's a macro factor. And what I want you to do is work as much as you can into the Porter's 5 forces. And I'll give you examples of that, how to do that. I think Porter's actually is a very good framework. Won't fit everything, but it will work well. But we'll talk more about this paper. Then you get into your company. When you get into your company, you're going to essentially fit your company into that industry. So a good example, Porter has a generic strategy. So you have differentiation and cost leader. Is your firm a differentiator in the industry? If they are, how do they differentiate? Is it service? Is it the product? What product features do they have? How do they stand versus their peers? Some industries, it's pretty straightforward. Some industries, it's really, really tough. You ask the question, How do you tell the difference between Home Depot and Lowe's? If I put you in the middle of one of those stores without telling you which one you're in, how long would it take you? If we took out all the company names from it, how long would it take you to tell which you were in? Is it that obvious? If I were to put you into two banks, could you tell which was which? Banks are pretty hard to tell apart, aren't they? They're all very similar. So that's what Porter's asking for. If it's pretty obvious why people buy Apple products instead of other products, and you know why, you can explain it. You know, why do they get that extra margin? What is about it? That's, you got a good industry. If you can't, everybody looks the same, then you know you've got a challenged industry. So we'll talk about that. You do want to add a section. I'm just saying this because employers are looking for this. I actually don't think is as important as people say it is, but the ESG, you need to do something to that, but that one's fairly simple because Bloomberg has a good ESG and you can usually get it pretty easily. But we'll talk about what's in there. You'll do a SWOT analysis, which won't be that difficult. The key on all of these, highlight this word. The key for these first few papers is this word growth. How fast is this industry growing? How fast is this company growing within the industry? So you mentioned Valero, right? Refiners, gasoline, you think of that as being a shrinking industry because of all the global warming and the electronic vehicles. Can you somewhat get your hands around? I was listening to a really good podcast on AutoZone. You know, AutoZone is these older cars and you be fixed, mainly combustion engine kind of cars. And so they're asking the question, what does this mean for AutoZone? Are they done for? And he made the argument, no, they've got another 20, 25 years of really pretty decent growth. We're not that concerned. Ultimately, it's going to become an issue, but right now it's not. So he had some data to back that up, whether you believe him or not, but he had some data to back that up. But you're down to the growth, and that's what Porter is after. He's talking about, is this a good industry or bad industry? He's talking about growth. Is this industry growing or is it shrinking? Where is it in its life cycle? Those types of things. If you want a good way to really get into your company, we could even experiment with this. Sorry, I've got to hide this thing, but I don't remember how to hide it. There it goes. So let's try Valero, because I know you just type supply chain management and do a supply chain management, or what's the other one? The more general one. Speaking of Porter, value chain management. Those are really good terms. Have y'all used value chain in another class? Value chain is becoming really, really popular. So Porter also did value chain. Value chain, did anything come up? Value chain is development managed guru. Yeah. So what Porter's asking in the value chain is, from the very start of what the firm does to its very, very end result, what value does that firm add in each one of those? It can be where they get the raw materials, what value they add that in procurement, what they do in their process of taking that and creating a product. It's in their marketing, it's in their customer service, it's the service after the sale, it's their staff functions. I was listening to the lady who used to be CEO of Cinnabon, and she's talking about one of their big value chain what they add value over their competitors is how they work with their different licensing groups. It's exactly how they sell their license and get money off of that and control that. And then also they have a portfolio of things like Cinnabon and is it Anti-M? What is the I forget what it's called, but how they arrange all those so they get as much benefit synergies between those different ones. So part of their value chain, she said, is that staff function that handles all of that. It's only, a few people. So that's what you're looking for, is how do they add value? I was listening to, oh gosh, one of the, can't remember the name of the company, but they said their management, their goal is every single point on that value chain, they need to be well above average. They need to be strong in everything. They can't be weak. He said it's like a world athlete. If you're a world athlete going to the Olympics, and you just have one bone that's not working, you stub one, you pull one muscle, you're done for. You have to be just absolutely excellent in everything. They said that's their goal, is just to be, world class in every single thing they do. So that's a good way to think about your firm. First, what is their value chain? Where does that entire process, who does what, who's involved, what value did they add, how well did they do it? Are they better than everybody else? They average, they below average? So you might try here's a value chain analysis of Valero right there. I don't know who this is. This could be a high school freshman. So pretty short, but you'll be able to find them for your companies. So supply chain management is focused on the raw materials, the employees, the very end product. The value chain is everything. It's really asking, anybody could do this. Anybody can refine oil. What is about Valero that they add or subtract value along that chain? So it's a really, really good way of thinking about a company. And it also is a good way to find some really good analysis on your company. So those are the first two papers. Then the third paper is very straightforward because I've already written the paper. You just have to edit it, right? I've already done paper 3 for Walmart. You're going to pull that paper up. It's one paper where plagiarism is not an issue, unless you plagiarize each other, but you're going to pull that paper up and you're going to edit it for your company. Right? So I used to have students, hey, do a financial analysis of your company, and I got really horrible financial analysis. I was kind of shocked that like 90% of finance majors don't know how to do a financial analysis, and it was a little depressing to me. I don't know what we're doing wrong in teaching you guys, but didn't know how to do it. And so I said, forget it, we're just going to do my approach. Now, if you had my business finance class, right, Sebastian, who else said me for business? Oh yeah, y'all remember how to do it, right? It's the same thing you did in that class. So you'll probably be doing a different company. I don't know if you remember what company you did, but if you had that class, it'd be similar. So I'm very strict, right? I gave you a template, you just follow it. You can add some other stuff, but don't subtract. Now, I had one student take the class, and she didn't follow that, and I couldn't grade it. I couldn't grade it not just because she didn't follow the template, but it was just not a good analysis. It was all over the place, wasn't organized. I said, you can do it again. She tried to get me fired. She was so mad, but it's like, I don't do this because you have to use my template. I do it because students just don't do this very well. So I'm going to say, just do it like this. This is a good template. It does work. If you were to take my template and in your first job, just use it, you would be in good shape. I'm not saying it's great. It's not perfect. You can improve on it, but use my template and then improve from there. So you're not just starting from scratch. All right. So just make sure you're aware you have to use my template. I'm not backing down on that one. Forecast is another area I've discovered. I used to not do forecasts, and I discovered there's a lot of finance majors that have never done a forecast. So we're going to do a forecast. I have a very simple template you can use. If you want to do it, it's not the greatest forecast, but you can use it if you like, or you can build your own. I have in the past taught forecasting classes for the Investment Society. You can get pretty involved if you really want to do a full-blown forecast. But at least use my format. The hardest part of the forecast is the revenue forecast. And I'll give you some ideas. Once you get the revenue built, the rest of it falls it's pretty easy. If you're doing Costco, you know what the gross margin is, you know what the net margin is going to be. It's once you get the revenue, and the revenue is essentially how many stores are they going to build. That's pretty straightforward. I mean, sometimes Costco is a very easy firm to forecast. Sometimes it's easy. Sometimes if you're doing Tesla, which I hope you're not going to do Tesla, that's a hard forecast to do. Valero might be a hard one to forecast as well, but I'll give you some ideas. Revenue is 50% of that paper. And then papers 5 and 6, if you took my investment class, that was your papers 3 and 4. All right. You're going to change your company, so you're going to have to still rewrite it, but at least the discount rate piece, you can pull from some of that. If you're saying, I didn't take your class, so what I do, well, we have student examples out there so you can see somewhat of the format. You have to come up with your own stuff. The numbers have changed. I used to do 5 and 6 together, and I think that's the way it's in the syllabus, but I think I'm going to change it and combine 5, 6, and 7 and just have a later date. And the reason for that is 5 and 6 and 7, they're valuation papers. And the struggle we're having is students who finish paper 6 and they summarize their valuations. And then they do paper 7, now they got all these other valuations. And it was just a mess. So now what I want you to do all your evaluations and then a summary at the end. And the summary at the end, I want you to do, I don't think I have it in here in the notes, but I want you to do a football chart. Have y'all done football charts? Anybody know who knows what a football chart is? Anthony, where'd you get that?
I tried to make a tornado chart and it's very similar.
I don't know what a tornado chart is. So, these have gotten really popular. You see them on a lot of analyst reports now. So what I wanted you to do is combine those 3 papers and then you'll have all these valuations, a good football chart. What the football chart says is, here's the current price. Here's my range on discounted cash flow. Here's my range on free cash flow. Here's my range on relative value. And you're looking to see, you know, where does that fit in the football chart? Our team that won the CFA challenge put a football chart in theirs. You also had some challenge in it. I was worried they're going to ask you some tough questions that get you in trouble, but it was pretty standard. A lot of teams use football charts. They're pretty common now. So it's a good thing to have in your paper because you see it so much. You want to kind of jump on that bandwagon. I like it. I think it's a good approach. They're not all the same, but we'll talk about how to do them. But it's essentially saying, we really don't know what this firm is worth, but we're pretty confident it's between here and here. So we think it's between 80 and 140 and it's trading for 85. That sounds like a pretty good deal. We're getting at the lower end. I just finished reading Barbarians at the Gate. It's not my kind of book. I don't like, one of my students recommended. I just don't, it's so negative on finance. It makes us look like a bunch of greedy, heartless. And I think the people in the book, if the book is accurate, they are really greedy, heartless people. But one thing in that book is, oh, we know it's worth at least 95 bucks. And I look at the analysis they're doing, which is really simplistic, and saying they don't know it's worth that. They're saying it with great confidence that they know that, but they really don't know that because that's what bankers say. It's, oh yeah, they're getting that stock cheap. Why would a stock that's trading for 60 bucks be worth 110 bucks? Why would a few investment bankers on Wall Street have a better idea of what the stock is worth versus the thousands of people with 2 MIT degrees that are valuing the company that think it's worth 60? You know, to me, it doesn't make sense. I think we are pretty uncertain how much the stock is worth. I think the ranges, when I took the CFA exam, they had an analyst report and we didn't know what to do with it. It was one of our readings. It's like, what are we supposed to read this and answer questions about this company? But I looked at it to see what is in an analyst report, which is how I based this class. I took all the things they had in there. Their stock valuations on Merck were anywhere from, I think it went from like 25 bucks to $150. Really wide range. So it can be a pretty wide range. I think that's okay. What most students will do is if the range is too wide, they'll change their assumptions to bring in some, not because they have more confidence, but just because they don't want to be that crazy in a paper. So you do have to, there is some politics to this, that you're going to show this paper to a potential employer saying, I think the stock is worth somewhere between $10 and $3,000. That's not going to look good. So you're going to have to force yourself to bring in your assumptions somewhere. So there's some things I do want y'all to do just because you see them a lot. So the relative value, I have a file there that I'll help you update using Bloomberg. I'd rather you go get the data yourself from Bloomberg. I'll do a video show you how to do that. But if you can't do that, you know, I can pull some of the data for you and get that to you. We use it, right, Gabby? We use it for your sector. It's not that hard of a spreadsheet to use. Relative value is very, very popular, pretty common. If you watch the Bloomberg Market Concepts, they do a lot of relative value in their equity evaluation. It's pretty common. It's straightforward. I'm not sure is as reliable as we like to make it. We tend to have these ideas that we have some confidence in what a stock should be trading for. I don't know if it's really all that much more valuable, but it's very common, so we need to do it. Then the last paper is by far the easiest. I want to put some technical analysis in there, but boy, I'm really easy on this paper. You're tired, it's the end of the semester. So we'll see on that, only require 3 that you have to do. It's usually the shortest paper by far, 3 or 4 pages long. You can do the entire paper just sitting at a Bloomberg machine and just using what they have. They have everything you need right there. You know, you just find some technicals you want to do. Require moving averages. It doesn't have to be simple moving average, but some moving average, and then 2 others that you can pick. And I recommend pick one with a weird, complicated sounding name, just so it looks good in your paper. There's a few of them out there that sound wilder than they really are. But that one's an easy one. And then your exec summary at the very, very end. We'll talk a lot about this. I'll give you several examples of them so you can see what they typically contain. Did y'all start with your exec summary? You finished with yours? That was the last thing you wrote, or?
Yeah, this is a lot.
And it's probably the only thing your boss will read. So you're thinking, okay, I just wrote 8 papers and they're only going to read one of them, the 9th one. But you couldn't write the 9th one without doing what? Writing the other 8. So you're not writing the 8 for your boss, you're writing the 8 for yourself, so you can write the 9th, which is the only one your boss is going to read. So you've got to figure out these companies and know them extremely well, so that any question your boss asks, you know it off the top of your head. Your team did a great. Well, their team, I heard 2 competitions. They had one in the morning, one in the afternoon. In the morning, boy, they aced it on the questions. I thought, wow, they got a good chance of winning this. In the afternoon, it didn't go quite as well. And it's just, what question do you get? And they got very different questions in the morning. In the morning, boy, it was like, obviously, I mean, they know that question, and every team member participated. They gave really insightful answers. And in the afternoon, it's like I got stumbled on a few questions. Like I wasn't sure. I heard the other team, and the other team didn't do a very good job on their presentation, did okay on the questions. This team, our team, did really well on the presentation and then fumbled on the questions. I've seen other ones. We had one CFA team at Nationals. They did great on the questions, but their presentation was terrible because one person got tongue-tied and they got behind. And when they got behind, they just went as fast as they could to get it within the 10 minutes. And it was just terrible. And then they got a question where their answer was beautiful. You have to be practically perfect on this stuff. You really are. Some of this it's showmanship. You've got to be able to go on there. Finance has this thing of excessive confidence. And I think some of it, a lot of it's fake. We really don't have that much confidence, but you have to really exude it anyway. It's just the way the industry works. So you got to know this stuff, got to be able to talk to it. You get through this whole paper and you can do all of this, and you get an interview question when they say, give me an investment idea. You may not have loved your company, but just suddenly pretend like you do. And just talk about it and go into that kind of depth. That's what they're looking for. So I mentioned, see if I can find it. I can't remember how to spell Colossus. I really, really like this podcast. I don't think any of y'all have listened to it. I sent y'all the link a bit earlier, but there you go, right there, Anthony. Their last one's on EVs. Union Pacific would be a good one to do. Now, you have to be careful on some of these. If they're not publicly traded, they don't have a stock with a ticker. I mentioned Cinnabon. You can't do Cinnabon because it's not a public company. Rolex. Don't do Berkshire Hathaway. We're going to talk about that a little bit here. Berkshire Hathaway is not a stock. Berkshire Hathaway is a mutual fund run by Warren Buffett. You can't do Goldman Sachs. We'll talk about that. Well, UPS could really work. One thing I love about UPS, they have a new CEO, and she's making a lot of changes. Sounds like, from this podcast, it sounds like she's making the right kind of changes. Obviously, UPS has Amazon breathing down their backs. First time I saw an Amazon Prime truck, I was like, what? Amazon's going to be a transportation company? That doesn't make sense to me. And then you see them everywhere. And then I'm thinking, oh, this is the end of FedEx and UPS. This podcast says, no, Amazon's taking all the unprofitable business and leaving all the profitable business for UPS and FedEx. Okay, that sounds interesting. How's UPS reacting to that? That's a pretty big deal. How are they reacting to that? Very interesting. I wouldn't do Twitter, obviously. Viacom could work. Peloton, I think, is very, very interesting. This is they had, you're looking for some meaty stuff to talk about, and these podcasts, they do a great job of really getting to the essence of what's going on with this company. And that's the biggest problem students have writing papers, is getting to the essence. Students want to talk, here's the 25 most important things. No, that's not how you're screening. It's the 2 or 3. You got to really get down to what's most important. I don't think you can do any cannabis firms yet. Nextera would be good, maybe a little complicated, but if you're really into renewable energy, you know, it's the big guy, the big player, and certainly there's going to be a lot of information there. AutoZone, I really liked the AutoZone podcast. They did a good job, especially talking about working capital. We'll talk quite a bit about working capital here. I would not do like HelloFresh. Some of these firms are very interesting, but I'm not even sure they're public. Uber, maybe a little challenging, but especially with the losses here recently. John Deere would work well. Salesforce, probably not. Maybe, I don't know. Salesforce probably would work. Wyndham would be an interesting one. One thing on Wyndham, I had no clue, is how critically important that loyalty program is to them and how that drives their sales. Very interesting. Now, Smile Club, and they did both Smile Club and Invisalign. I think it's probably too early for those two companies. I don't know if they're both or either is publicly traded, but very, very interesting to contrast two companies that do things very differently. Invisalign works directly with dentists and orthodontists. Smile Club goes straight to the public. Very different business models, very interesting. Petco might be an interesting one. I wouldn't do ExxonMobil. We'll talk about that, but you could if you want to do. Facebook would be a fine one to do. Moderna would be fine to do if you can handle the complexity. That's a very complicated product, very hard to understand. So, you know, if you don't have a science background, it can be kind of tough. There's a Invisalign. Calm, I thought was interesting. I think Visa. Now I'm going to tell you, you cannot do financial companies. So no banks, no insurance companies. Visa is not a bank or insurance company. It's really a technology company. Visa is very, very interesting to me. There's some things going on they talked about in there. I think the electronic wallet is going to be an interesting. I think Visa, MasterCard, PayPal grossly overcharged for their services. That's why they're so ridiculously profitable. You know, they're talking, what if every time you walk into Walmart, it knows you're in Walmart, it automatically puts everything on a Walmart credit card, so you get a 2% discount because they don't have to pay the exchange fee. Would you do that? You don't have to bring out a card. You don't really care. Saves Walmart a lot of money. Saves you some money. They keep Visa and MasterCard completely out of transaction. Could that happen? We used to do that, right? Your grandparents had what, a gas card. They had their JCPenney card. They had their Sears card, right? All these cards. And then we all went everything to Visa and MasterCard. This podcast is saying, hey, we may break them all up again because we don't care. You walk into the store, your card automatically knows what to do. Doesn't cost you any time or effort, but you save 2%. You essentially take not so much Visa, MasterCard out, but you take Visa, MasterCard, and all those banks out of the equation, and you just go directly to Walmart. It's an interesting threat. Twilio, Cinnamon, I really like that one. Costco is a perfectly fine firm to do. It's only got one complexity to it that's kind of hard to figure out, but it's a fairly easy company to figure out. Chipotle would be a great company to do. They've got, what I thought was interesting on theirs is their food preparation. These kind of hub and spoke they're trying to do to try to make it more, keep the food fresh, but also make it more efficient. Shopify could be interesting, but if you're struggling with really, you know, how do I get to the essence of these firms? This podcast does an excellent job for the firms that work. Not every firm, and in fact, a lot of them will not work. So this is really what you're after, especially in paper 2. Figuring out that supply chain. I talk a lot about supply chain in here, just the entire business. How does it work? What are those key places in the business that really distinguish it from every other business? And that's what, in an interview, that's what you're looking for. they say, give me a good stock idea. You can say, wow, I think it's UPS. Everybody's focused on the Amazon Prime and all it's doing. But if you think, you get into it and you really explain the company in a nutshell, not in 40 paragraphs, but in 2 or 3 paragraphs, boy, you've got them captured. They see that you can get to the essence of the business. I had Jason, not this Jason, but Jason that I used to work with at USAA. He's a tech analyst. I had him come to the class, and he talked about his job and career. And then I said, at the end, I just want students just to yell out a name and you tell them the essence of that company. And boy, it was really amazing. He was any tech company, just yell out a tech company, and he could, in 3 sentences, tell you everything you need to be worried. And that's what you're after. All right. You got to get all this massive information and synthesize it down. And this podcast does that for you. I think, I mean, AutoZone is a good example. AutoZone, just give you an example of what we're after. So AutoZone, their big thing is always in stock. If you need a part to a 2014 whatever truck, we've got it. You're not going to go to Amazon for that because they're not going to keep all these parts there. And even if they do, it's going to take them 3 days to get there. And when it shows up, who's going to help you put it in? The AutoZone person is going to walk out to your, show you how to put it into the truck. How can you do that? That's terrible, right? Horrible inventory turnover. And yet they have negative working capital. And I remember hearing that on my bike, almost crashed. Okay, how can you have horrible inventory turnover and have negative working capital? And he explains it. It's, hey, we pay our vendors really slowly, and they don't mind because we're such a high quality company. They can take the receivables from us and they can go factor them. They get their cash. We're happy because we're not cash, we pay our vendors after our customers pay us. So we're we're cash flow positive, and they're fine because they can factor. That's an incredible model. Their model is always in stock and they can do it with negative working capital. And remember, negative working capital is good. Forget everything your accounting classes told you. You want your payables greater than your inventory. And that's what they do. And it's an amazing model. I had no idea, that I don't know anything about cars. So the only thing I've ever bought from AutoZone, y'all probably know. What's the only 2 things people who don't know anything about cars buy from AutoZone? Battery and wiper blades. Yeah, that's it. And even on the wiper blades, is like, that's my car. Hand me what I need. Oh, I'll go out and put it on them for you. Yeah, put them on for you. Yeah, do that. That sounds good to me. So impressive firm. But why is it impressive? I didn't know that until I listened to this business breakdown. I could just, after listening to business breakdown, I could sound somewhat halfway intelligent about AutoZone, even though I knew very little about them before. But why is AutoZone different than O'Reilly's or different than whatever the other ones are? He does a good job of explaining that. I thought really incredible job of explaining how they deal with the mechanic shops. Why do mechanic shops like AutoZone? What do they offer them? Those are the kind of things you're looking for in that advantage that they have. We'll talk about economic moats. Does your firm have something that is very profitable and protected from competition? And how do they have it? How do they protect it? How long can they protect it? Those are the kind of things you're looking for with your companies. So don't get so lost in the weeds that you don't step back and say, hey, what's this company all about?
You can do car companies.
Well, if you do car companies, so let's talk about what companies do you want. So if you're really worried about this class, because it is a tough class, I'd recommend you go as simple as possible. So the simplest are consumer staples and consumer durables. That's the easiest. So Costco is really simple. Target is a very simple one to do. Restaurants are fairly simple to do. McDonald's, well, McDonald's has a problem right now, but generally, Chipotle is good. McDonald's net worth is negative, so that causes some problems with the charts. But restaurants are pretty straightforward. Panera's, those kind of places. Some of the travel and leisure can be good, although 2020 really wiped some of them out. So you're going to have some really negative charts. When you lose 80% of your revenues in 1 year, it's probably not going to be good for your business. But so look at the consumer companies. Dollar General, very interesting firm. Home Depot would be great. Grocery stores are great.
Would Carvana need to move on the farms?
What?
Carvana.
You can see how much data they have. I like to have at least 10 years of data. My general sense, and it's hard to do it right now because 2020 is so unusual. Generally, when I was an analyst, I like to have one recession and two recoveries. I want to see how my firm did through a recession. It's just, I don't think 2020 is a normal recession. And the previous recession was 2008. So it's hard to do that right now because it's just been such an unusual period of time. But if I can't get a recession and two recoveries, then at least get 10 years, just so I can see over 10 years. If you can't get 10 years, that's why a firm like a Spotify or some of these firms, they just don't have much history. Tesla's not good to do because their losses were so massive until just recently. It's hard to do paper 3 when you have just massive losses. So Best Buy is a great firm to do. I wouldn't do Albertsons. Just Advanced Auto Parts would be good. Burlington, well, there's a lot of stores. I wouldn't do the bed bath ones. Kohl's would probably work. Nordstrom's actually a really good company to do. Very clean data. So there's a lot of consumer staples and discretionary that work really, really well. You know what they do. That's part of it. I tell you, Best Buy, y'all know that company. You know what they sell: appliances, computers. It's pretty straightforward. They have a knowledgeable workforce. What does that mean? They got to pay their workers more or less than Walmart. Have you ever bought a computer at Walmart? I've done it twice. It doesn't go very well. They can't even figure out how much to charge you because for some reason the codes don't come up. It's kind of frustrating, But you go to Best Buy, yeah, they know what they're talking about. They can help you. But you got to pay them more to do that. It's kind of like the AutoZone people. AutoZone, you go to AutoZone, you're gonna get a lot better service than if you buy through Amazon and have it delivered. So, these companies, you know how they work. You can, off the top of your head, distinguish them from their competitors. That's what you're after. The Gap really struggling right now, but could be interesting. But a lot of companies in there that are very, very interesting. I think some of the really interesting companies that do that, in an interview, sometimes it's better to have a firm that's not that well known. So it makes you look really insightful. So some of the firms I really like are in the industrial side or the chemical side. So like Ecolabs, I think it's a really interesting firm. I like Packer. Oops. That's one thing I don't like about y'all know what button they have to bring the floating thing back, right? It's the escape key. I hit the escape key like every 5 minutes. So Packer is really interesting. What I like about a Packer is, first, it's not a firm a lot of undergraduate students know. So if you bring up an interview, that sounds impressive. They only do really one thing. So they're, diesel engines. So they're building trucks. You have a lot to deal with global warming and electronic vehicles and autonomous vehicles, which is probably a bigger deal for truckers than it is for autos. You got a lot of really good meaty stuff to talk about. You got a lot of good macro stuff to talk about. It's a very well-run firm. It's a leader in its industry. It has a lot of competitive advantages. It's a great firm to do. So when you get into the industrials, there's just a lot to do there. There's a lot of interesting firms. You're looking for firms. Well, Cummins is a good one to use. You're looking for firms that don't have a lot of products, but that you can, it's a product you can understand. So your firm, I couldn't understand half of what their firm sold. You remember some of the things they sold?
I
was
remember all the names.
Valves and
I think they did
casters or
a lot of fluid management.
yeah, it's just,
Management, all these technical terms.
yeah, I watched YouTube's on that company and I was like, I still don't know what they do. And they have pictures of what they do. And it says, I don't know if I would hook that up
It
to a
almost
car
got-
or to a house or
It
to,
almost got to the point like they didn't.
yeah, it
so
was,
vague and like
And-
word salady that it was just, unless you worked there,
yeah, if you weren't an engineer in that, even an engineer in a different field wouldn't understand. If you're an engineer in that particular field, in the water industry or whatever, the product meant nothing to you. That's not a good company to do. If you can't explain their basic product, it's not a good company to do. But there are a lot of industrials that do things like Ecolab. I like Ecolab because it's very specialized. They do cleaning solutions. That sounds pretty boring, but they're really good at it. Y'all seen their stuff around campus, right? They They have a dominant presence. They're a very green company, so the ESG is good to talk about. They're a very innovative company, very well run company. You know, it's you got a lot to sink into there. So don't do banks, don't do insurance companies. So Anthony asked about auto manufacturers. So GM, Ford, you could do them. The biggest problem with those two firms is they have Ford Motor Credit and GMAC, and that dominates their business. So essentially, you've got a bank that has a small subsidiary that sells cars, and it just the numbers are all messed up. So I would avoid them just from that one point. Anytime you get into banking, that's a spread business. Banks don't have turnover ratios. They don't really have margins. They don't have free cash flows. So most of the stuff you use in all your classes don't apply to banks, don't apply to insurance companies. I don't know anyone that really does free cash flow for a bank. It just doesn't make sense because of the nature of the business. So if you have a business that has a huge lending arm, that's probably going to mess up your numbers. You probably want to avoid them. Now, real estate can work. You got to be a little careful on real estate, and some of the ratios we'll do in paper 3 won't work. Real estate companies don't really have working capital in the same sense that we do. So it can be a little challenging, but if you're a real estate major, there are some real estate numbers you can do. The guy I was talking about that I saw in Chicago, he did a real estate company. We actually found a really interesting real estate company. I can't remember the name of it, but I thought it was really interesting. Energy can work, but one thing to be really careful on, let me watch the time here, is complexity. So Valero can work pretty well because they're essentially a one product company. I mean, they do a few extra things, but you get to an Exxon, they do everything. Upstream, midstream, downstream, they're all over the place, even alternatives. That's a really complicated. They're also in retail. They have convenience stores, really complicated business.
So are all our papers going to be about one company?
Yeah, you write your whole paper. Well, paper 1's about the industry your company's in. Then all the other papers are specifically about your company, right? So you're picking your company, you're picking your 9 papers. All right. So Exxon, I think we've had students do Exxon before. It's really tough to do. A Disney. What does Disney do? What does Disney not do? Theme parks, cruise lines, movie production, ESPN. They now have their online digital channel. It's a little bit much. To understand Disney, you have to go through every one of those industries, and they're very different industries. So they even have retail too. I've seen Disney stores in the malls the last 20 years ago when I last went to a mall, they had a Disney store in there. Very complicated business. That's why Berkshire Hathaway doesn't work. It's just too many things. So I don't mean just avoid the conglomerates like GE, but even a firm like Amazon. Amazon has a retail. They also have the cloud servicing. That's where all their money comes from. That's a pretty complicated business. You could handle the cloud services. You can handle the retail, but to write a paper about both, you're really writing about 2 different companies. And it's very, very difficult to do that. So it's just tough. So a Hormel food is going to be a whole lot easier than an Exxon or a Disney or Amazon. Essentially do one thing that's pretty easy to understand. Some of the energy companies, if it's kind of the service firms that like a Halliburton, a little more limited, yeah, that can work pretty well. Firms like United Airlines, 2020 might be such a problem that you may want to avoid them just because of that. If they lost billions and billions of dollars all in 1 year. So you don't want a firm that's just been losing. That's why Tesla doesn't work. It's just been losing money, and they finally made a little bit of money. It's just hard to write about them. All the charts look bad. Let me sort this file down. I do have a video that shows you how to use this file, and we'll talk a little bit more about it. Let me sort it by let's do it by sector. And then by subname, and then my market cap. All right, I did it backwards, but utilities, they can work. It's a lot more complicated industry than you might think, especially with the D-rig before. So, you know, Duke Energy, those are interesting companies. They can work pretty well. They can be a lot more complicated. Real estate, we talked a little bit about that. I would shy away from real estate, but it's possible. Materials, like Nucor is a very interesting firm. The steel industry, you think the steel industry is dead in the United States, but they're the mini mill firm. Interesting firm, has pretty interesting. They have a major plant out in East Texas that I drive by every once in a while and think, wow, I wonder if they would let us visit them. Then you have the old companies, you know, the kind of old world companies. So materials is broken down between, you know, metals, chemicals, other stuff like timber. So I think actually Ecolab's in here somewhere. So metals and mining. Could you do a mining company? You know, there are gold producers, silver producers. You can. There's some challenges to those, but there's certainly firms that you can get your hands around. Like, obviously, if you do them, you're going to be looking at gold prices. There's Ecolab right there. You know, a good size $47 billion company. I was talking to Anthony earlier. I would avoid companies under 5 billion because the larger the company, the more information there is. The smaller the company, you may be really not finding anything at all. Tech, plenty of things to do in tech, but again, in tech, you gotta be careful. Do you understand the product, what they do? Make sure they're not doing too many things. So I think Apple is doable. They are in a lot of stuff, so you do have to be a little careful. You know, is Apple a hardware company or a software company? The answer is yes, they are. But how much is what versus the other? You almost get the sense that you only do the hardware because they want to sell the software. You know, so it can be a little tough from some of these companies, but you certainly can do it. And you know, they didn't they hit 3 trillion there for a few days, a few minutes. Dell, I wouldn't do Dell because they just haven't been out public long enough, and they have a bunch of losses. I don't know how they do that. I think they probably have gains now. I think they finally turned their profit. I thought it was pretty hilarious though, because let's see if I can find them. This computer is really, really slow. Okay, well, that'll take forever. So one of these days it'll come up. But Dell, massive revenues with losses. How can you have $80 billion in revenues and not make money? But obviously they're structuring a company. Right. I don't know why UTSA has to have the slowest PCs internet in the world. Yeah. So $90 billion. How do you have $90 billion in revenues and lose money? They've recently started making money again, but just 2 years ago, they were losing money. You got to work really hard to have $90 billion in revenues and lose money, especially on a firm that's this straightforward. You're just selling computers. How can you lose money doing that? That should be a fairly straightforward thing. So if look at your firms and see what kind of losses they've had. They've had, you know, 5 out of the last 7 years they've lost money. It's probably not going to work well. If their net worth is currently negative or has been negative a lot of the previous few years, I wouldn't touch that company. It just makes things really difficult to do. But tech there's a lot in tech that you can do. Semiconductors, I'll just warn you, semiconductors, make sure you understand the company. Okay. We've had some really, really good papers on semiconductors, but just make sure you're not getting in over your head. NVIDIA is a great company. We've had 2 or 3 really good student papers on NVIDIA. So, you know, it definitely works. And it works well because they don't manufacture the developers. So it makes it a little less complicated than Intel, maybe. Yeah, it's software. There's plenty of stuff there. Firms like Accenture can be really, really interesting, I think. They're really a consulting firm. They're really the old, I think, old Arthur Anderson people. So they're consulting. It's a little strange to have a firm that doesn't actually sell a product. It's all services, but it works. You can do analysis on that. There's interesting thing there, and they have some really, really good looking numbers there, but yeah, a lot of tech companies, obviously. Transportation, again, just make sure they have positive numbers. Some of the trucking companies I think are really, really interesting. A lot of them, be careful, because you look at a JB Hunt, you think, oh, that's a trucking company. You might discover most of what they do is logistics, and that's a very different business than trucking. They do some trucking, but most of it's logistics. So just make sure you really understand the company as you get into it. But there's a lot you can do that. Capital goods, Fastenal, Granger, these are all perfectly fine companies to do. We have a student that works for Equifax. If one of y'all pick Equifax, I'm sure he'd be willing to do a conference call with you and talk to you. We have people who work for Valero. I'm sure we can get them to talk to you. Transportation can be interesting. The rail lines tends to be pretty concentrated industry. They tend to be natural monopolies. So it gives you something to really sink into. The services firms, you know, there's a lot to work there. Capital goods, you've heard of some of these companies, the Caterpillars and John Deere's and types. And there was a business breakdown on John Deere. They did a really good job of explaining the company. So yeah, the professional services, I don't know where they put Visa and MasterCard in here, but sometimes you'd be surprised where they put them in. Waste management, I think of waste management as a utility, not as an industrial, but they got them in industrials. And they do that sometimes where they move firms around. So the American Tower used to be a utility, but they restructured themselves as a REIT, so they moved them down to real estate. I don't think of American Tower as a real estate company. I think of it as, I don't know if I think of it as utility or not. I mean, they're just setting up towers for phones. You know, so some of these firms can be tough to know exactly what industry they are, but you can see there's a lot in industrials that you can work with. Let's see if they're even in here. Don't hit that button. Yeah, they have them under diversified financials. There's Discover as well. Visa they have under information technologies. So the key, whether it's a technology company or a bank, is do they have any credit exposure? So Visa and MasterCard, they don't really care if you pay the card back, because that's the bank's problem. So they're setting up all the vendors, they're doing all technology, they're really technology companies setting it all up. But then Bank of America issues a Visa card. If you don't pay it back, then that's Bank of America's problems. Whereas American Express may actually have that credit exposure, and that makes it a bank. So if you don't pay it back, if they lose the money, then that's when it becomes a bank. So MasterCard and Visa, they have them under information technology. It makes, I'm not sure that's the best place for them to be, but they don't belong under financials. And PayPal's in there as well. So yeah, there's quite a bit you can do that. The global payment services, those are getting really, really quite interesting. I think mainly because the overseas competition is getting pretty interesting. And then you have even firms like Western Union. You know, it's amazing they even exist anymore. This is the firm famous for telling Alexander Graham Bell, we're not interested in your product. We don't think anybody will be using the phones in the future. We're sticking with Telegram. You think that firm still exists, and not only do they exist, they're actually quite important when it comes to all these payments around the world. So there's some interesting payments. You know, there's a lot there. They're very profitable firms, but I think the new technology could actually wipe out this. I'm hoping they do. My charity pays PayPal way too much money. It makes me very furious that they, in fact, if someone wants to donate like $10,000 to me, I say, just mail us a check, please. Because if you go through PayPal, we're going to be sending them hundreds of dollars. Just mail us a check. Are there easy, you know, I've been using Zelle more and more. Zelle, I don't know how Zelle makes money, but I like the fact that it doesn't cost me anything. I don't know who's it costing. Maybe it's saving. Y'all know how Zelle makes money? Are they charging banks money to do things more efficiently? Does PayPal like Zelle?
No.
You know, so there's some technology coming in. I think is really interesting. So it just gives you a more interesting paper, but you're not in 20 different places. You know, you can really size it down to 2 or 3 major things going on. All right, so a lot of industrials. That's kind of the biggest. Healthcare. Be careful. There are some really complicated healthcare firms. So if you can do healthcare, choose really. So a firm like Medtronic can work really, really well. They don't do a whole lot of different things, so it can be fairly easy to understand. Just be careful. Health insurance companies should be under financials. You definitely don't want to do health insurance, but it's possible some firms like Humana may do both. They may actually provide services and provide the insurance. So just be careful. You don't want to be doing any insurance. Pharmaceuticals are really complicated business. So if you do pharmaceuticals, make sure you know what you're getting into. So Moderna is a very interesting firm. Their stock price has been all over the place. Obviously, the mRNA is a very interesting technology. It can solve a whole lot of stuff. But I've listened to their CEO talk. I think there's a Moderna business breakdown. I'm not a bio. I don't like science. I didn't do well in science. It goes over my head really, really fast. And if you don't understand what your company does, it's really hard to write a paper about them. So just be aware, be warned. There's a lot of healthcare companies out there, obviously. Healthcare equipment is probably better than pharmaceuticals from a understandability. You can't do financials, banks or insurance companies. We talked a little bit about energy. So energy, just be careful with complexity. Try to find a firm that doesn't do everything. So upstream, midstream, or downstream, try to limit yourself. And you do need it in paper 1, talk about the upstream, midstream, downstream. That's in every energy industry outlook. So if you don't know what that is, go to YouTube. YouTube is a great resource for this class. Go to YouTube, put energy, industry, upstream, midstream, downstream, and you'll have 50 YouTube videos coming up explaining what that means. Or go to Exxon's website, and they have, under investor relationships, they have a PowerPoint that walks you through all of that, and you know, for free. But energy can be interesting. There are some firms that are a little easier to do than others. And then, of course, consumer staples. The beverage industry is very, very interesting right now. You're either going to be doing alcohol or soft drinks. So you're not going to combine those two. We've been running our models last several years in the investment society, and Monster always gets scored as one of the best companies out there. It's also an expensive stock. So it's interesting. I don't know if I'd handle tobacco right now, but you know, vaping is getting interesting, and you know, back in the press. So, you know, there are some interesting things going on in there. But beverages can be interesting. Any of these products that you've heard of, you know, cosmetics can be interesting. Some of the one product food companies like Tyson's, Hormel, Kellogg's, McCormick. How much more basic can you get from McCormick? My word. It's pretty straightforward. Campbell Soup has done some mergers and acquisitions. They're a little more complicated, but they're out there. Pilgrim Pride, sell flour. What's the growth story on flour? For a lot of companies, the only growth story is emerging countries. That's about all you have. I don't think Americans are going to suddenly start. Well, I guess COVID, people started baking their own bread all of a sudden, but that just means they sold flour to HEB instead of to restaurants. But you know, some of these are a little less interesting than others. They're perfectly. Hostess, it's amazing they're still in business. Household products, obviously Kimberly-Clark, Colgate, pretty straightforward kind of stuff. They have some ESG issues with their packaging that they're all dealing with, those type of things. They have emerging market types of issues that are going on. Consumer discretionary, there's a lot there, especially on the travel and leisure. Consumer services, I don't know if we've had too many students do these. It's maybe so. Obviously, the restaurants you can certainly do. Darden would be an interesting one. Domino's. Airmark is pretty specialized. So there you're getting to something where it's hard just to find who their competitors are because they're, you know, they do such a specialized thing. Not special.
All of it. There's the reason why.
The Lennar one.
Oh, I meant to eliminate it and I just didn't. It has 2 class of shares and I meant to just delete one of the ones. So I just forgot to do that. Yeah. I may have missed a couple of them. Yeah, so on the consumer side, you know, I got the breakout specialty retailing, home furnishings, you know, so there's different ways to organize it. So you can try Williams Sonoma. I don't know who shops there. When I walk in and there's a little pot that's $74, I'll go to Walmart and buy it for $3. But I guess there's people much more sophisticated than I, but then I buy my clothes at Walmart too. So, you know, but I don't understand stores like that. Do not do Bed Bath. Don't do any of the mem stocks, GameStop. Don't even touch them. There's no reason. You could certainly do a housing stock right now. That would be fairly interesting. Obviously, there's a lot you can do there, and there's several of them in there. So you can see there's a lot on the consumer side. There's a lot that you can do. There's enough. Yeah, I may have just forgotten to delete all the ones. So just be careful if there's 2 tickers, use the ticker that doesn't have the red because that's a different class of shares. Now, communication services, that's the new category they created. It used to be, a lot of them used to be under technology, but that's for Facebook and Google. Those firms where most of their revenue is coming from advertising, they moved them all to communication services. So there's some interesting ones there. The telecommunications there, I'll warn you, telecommunication is a very complicated industry. So just be real careful if you're going to do that. I think, so what we're going to do on Thursday is every student is going to pick their company on Thursday. And I'm going to put you in the groups. So you have between now and Thursday to pick your company. You do that. Any questions? I've had some students send me a list of 5 companies and one of my response, and I say, these 2 would work really well. This one worked well, but it has this issue. Those 2 I wouldn't touch. So you might think in that terms, I want to get down to these 5 and just get my opinion. I've seen so many of these papers over time. I meant to show y'all some of the papers. I'll do that next class, but if you want to look at them, they're out on our website. Just go under content and just under paper rubrics and student examples. There's a lot of student examples out there, and I'll show you some of these just so you can get a sense of the format. You do want to pick your formatting really early, what you're going to use throughout. Pick something that works well with graphics. That's why you want to keep the margins really narrow so you got plenty of space. But we'll Thursday night, we got to pick your company. Once we pick your company, we can move full blast into paper 1. Any questions? All right, I'll see y'all on Thursday. If you want to call to talk about it, I'm on my bike every morning. So just call and I'll talk to you. And if you have questions about companies, if you go to YouTube, and you do a search on my name, if the system ever comes up, search it as Ron Sweet, not Ronald Sweet. You'll see my ugly picture will come up. You can stand and look at it. No, it's kind of, and click on that and then do playlists. I'll be putting our class videos in there, so you'll have those. But if you go down, it's not in our class, it's for another class, but you can use it. The EMBA videos, UTSA EMBA, if you click on that playlist, The very first one shows you how to load Capital IQ on your PC at home. You have to do it through the UTSA library. It almost never works the first time. So give up and try again, you know, get out, come back in. And then how to use our actual file. I got a video that shows you how to do that as well. So that's more paper 3, but a lot of students, it's good to go ahead and build that spreadsheet for paper 1 because it gives you a good sense of the industry. I can't show you, that's one of the problems using Capital IQ. If it's not loaded, then all I get is error messages when I bring the file up. That's the downside of using Capital IQ. So I'm very tempted, and you might do this as well. Once you have the file set up and you really, really like it, save it as a paste value file and paste value all the Capital IQ. Otherwise, every time you make any little change, it updates and it takes it forever. So I might do that with this file so we don't have to keep updating it. So those two are the ones you might use. There's some other videos that we'll have that I'll be using throughout, and plus you'll have the class videos that will help as well. So if we look at the paper descriptions, let's just again see what we have coming up pretty soon. So we're going to focus our attention on this very first paper, to industry analysis. So tonight, what you really need to do is pick your company and then decide on the industries. So one thing on the industry, you're probably going to have 3 industries. So for paper 1, you're going to have the most limited definition of your industry. So if you're doing Home Depot, your definition is going to be hardware. Home Depot, Lowe's, Ace, very, very close. When you get to paper 3, you're going to broaden it out much, much wider. So you'll see in my paper 3, I'm doing Walmart, so you can't do Walmart. But for Walmart, I'm essentially doing all the retailers that have a box store. And I've thrown Amazon in there because of Whole Foods. So I want retailers that have a store. So I don't want someone who's only online. And I want them to be a retailer. So I don't want to be a special retailer. So I'm not putting Lowe's and Home Depot in there. I don't think. I think you remember that. So that's my definition. Then we get to paper 7, you'll probably broaden out even more, and you might do the entire consumer staples, entire consumer discretionary, all the energies. So you don't have to have the same industry, but for paper 1, you want your industry to be very, very specific. The type of companies you would think of when you think of your company. Okay, so you'll have different groups. So the reason you want paper 1 to be most limited is part of that paper will probably be a discussion of the industry, the players. So you'll see some of the example papers. They'll talk about here are the 5 biggest players in this industry. So if you're doing a semiconductor, you may talk about the big fab companies, the big designing companies, contrast them. And what you're really trying to do is, which really comes down the porter, is how do you differentiate between the biggest players? If you can't differentiate them, they're all the same, then that's bad from a porter standpoint. So what you want is an industry that's very well differentiated. That's why I like that business breakdown. And listening to the AutoZone discussion, they made a really clear distinction of what distinguishes AutoZone from O'Reilly and the others. What distinguishes Dollar General from Family Dollar? Do you all know? You say, well, Dollar General does this, but Family Dollar does this. I have no clue. I never go into those stores. You know, they're convenient, but you know, I've got 2 Walmarts even closer to me, so I just will go there. If you can't answer that question, it raises red flags. What's the difference between CarMax and Carvana? Other than the big 4-story, you know, Carvana has that one little thing, but is that really a distinguishing thing? Is price the issue? Is it service the issue? Is it location? Is it the internet access that they have? You know, those kind of things you're looking for. And so that business breakdown, I think, does an exceptional job of saying, to me, one of my favorite 2, actually in my graduate class, I have a dentist in there, and I'm going to encourage him to listen to the 2 business breakdowns between Smile Direct and Invisalign, because they do, Invisalign goes directly to the dentist, Smile Direct goes directly to the public. Well, that gives you something really needy to talk about in paper 1, because what other competitors are there? So that's a pretty limited field. Your competitors are orthodontists. Well, that's a mom and pop, non-traded, you know, so it gives you a lot of meaty stuff to talk about in the industry. So for this first paper, you wanted to find your company and then make it very, very specific. So Chad, if you stick with Madeira, and I showed, Madeira is a tough one because it's a firm that suddenly showed up out of nowhere. So the historical data is kind of tough. Pharmaceuticals is one you got to be real specific. Who are their competitors?
Yeah.
Obviously, when you get paper 7, you'll just do all pharma and bio, but in paper 1, you want to limit it down. You don't want to do every single pharma out there. All right, so then we're going to get to paper 2. Paper 1 and paper 2. This is really, really important. I've had students where I've had to kick their paper 1 back and say, I'm not grading it. And it's because they made their paper 1 about their company. It is possible you'll write paper 1, you won't mention your company once. Paper 1 is about the industry your company is in. Now, if you're doing soft drinks and you're doing Coca-Cola, you're going to mention Coca-Cola in your paper. Why? Because they're the major player. So that makes a lot of sense. If you're doing Target, you're probably going to mention Target in your paper. But if you're doing a smaller player in a major industry, you may not mention your company at all. But the only reason you mention your company in paper 1 is they're one of the major players. You want to distinguish them from the other players. All right. So you can write your entire paper 1 without mentioning your company. Then you get to paper 2, and you're now going to fit your company into that industry. So you can't forget what you just did in paper 1. All right. So if you in paper 1, you say the importance of paper 1 is differentiation on these factors. Paper 2, you're going to say, here's how my company lines up in these factors. So NVIDIA, where are they? Is it artificial intelligence? Is it in cars, autonomous vehicles, electric vehicles? Where's their focus? So paper 1, you're trying to get a sense of the industry. What I'm discovering with some companies, when you're writing paper 1 and paper 2, you're trying to figure out the growth in the industry. From a lot of industries, like let's take semiconductors, a good example. You may not talk about the growth in the industry semiconductors. You may be talking about the growth in industry that your semiconductor supports. So if you're supporting AI, what's the growth in AI? If you're supporting autonomous vehicles, what's the growth there? So that's why you need to be so specific, because you may have to actually bring in another industry to discuss that. When you get to paper 2, you're really going to deep dive on your company and really focus on where they fit in, but you're going to tie a lot of that back. So the way I think about it is paper 1, what's this industry? Is it a growing industry? Paper 2, who's my company? How does it fit in this industry? Is it growing faster or slower, more slowly than this industry? So you're getting a relative, and it's all about growth. Don't forget that. It's always about growth. That's what Porter is after. He's talking about strong and weak industries. Strong industries are growing, weak industries are shrinking, and then you fit your company in that. So that's really what you're after in papers 1 and 2. So those are 2 papers that are somewhat related. I did mention to Chad, if you get through paper 1 and you start worrying about your company and you get into paper 2, you can switch companies in paper 2 and keep your paper 1 essentially as is. So if you start panicking, you can't switch industries. You can't go from Coca-Cola to Target or something, that would be too much, but you could change pharmacies or energy companies or something like that, as long as it fits into that category. Let me show you, I think this will help when you get into this video here.
This video, figure how it's set up.
I don't want to hear myself, but sorry. So in this video, this is a slide in that Excel model. And I have one column that is your companies. And if you look at the whiteboard, you can't see that very well, can you? But my company is Walmart. So I put a 2 next to Walmart, and then I decide all the companies I'm going to compare them to. So Amazon, Home Depot, I do have Home Depot in there, Costco, Lowe's. This is for paper 3, so it's the broader category. I don't consider Home Depot a competitor in paper 1. But I put all those companies I'm going to bring. You might change this and put your company is 3, your most direct competitors is 2, and then your other companies is 1. That way, when you sort it from highest to lowest, you have your company, the key competitors, and then everybody else. So you can modify this even more. You don't need to do that for paper 7. For paper 7, you're probably going to use the GIC sectors for your paper 7 and just select all of them. So you don't need to put your 2s, 3s, but paper 1 is the most restrictive. Paper 3 is more broad, but you want it to be companies that, you know, if you're doing like here, I'm doing Walmart, they have actual inventories, they have actual stores. I want everybody in that category to have inventories and stores. I don't want to be a service only kind of company. Okay, so you can watch this video. It's only 13 minutes long, and so it can help you. So I'm encouraging you might do this even before you do paper 1, because it's going to help you understand paper 1 better, I think, and get you organized. And then when you get to paper 3, you're ready to go. You know, so I'm using a lot of VLOOKUPs. It's extremely important. Anytime you sort this page, you sort everything. It goes over many columns. The video shows you that, because if you only sort the first 3 columns, then the VLOOKUPs are going to find your company and go get whatever data for whatever the company was before. All right, so really important. Y'all know how to use the control in, down, and all that kind of stuff. If you don't, watch the video. And I'm using this video with my graduate students, so you're going to say, wow, professor, why are you going so slowly? And it's because some of them have never used Excel. You're all Excel experts, so I'm going slow for them. So see how I go all the way over. Hopefully, keep going. Go all the way over. Make sure you always sort with the entire thing. I don't recommend that you use the title stuff. I forget why the table functions. I would do it the long way, just so you make sure you don't. I don't like the way Excel, when you, I forget what they call it, but you know, when it just hides all the rows that you're not using. The problem is that they're still there, and if you're not careful, it can really mess stuff up. I'm better off to sort the whole thing, so that you can see that's the way I'm showing you how to do that. So where is this file? So when you go into content for our class, so have y'all been into our Blackboard yet? So you go into our Blackboard, under content, you got the syllabus. we will have teams. We'll try to figure that out tonight or this weekend. You have a lot of student examples. You have your class notes. Here's the models and templates. The very first one, it says paper 3 Excel model. That's the one you want to update and be ready to go on, and watch that video as soon as you how to do it. So you probably number 1 you need to do is watch the video on how to get Capital IQ set up, and then set this up. That's about 30 minutes worth of videos. And then you'll notice paper 3 Walmart. I've already written paper 3 for Walmart, and you'll actually take that paper and you're going to edit it for your companies. So you can see paper 3 is much more straightforward, and some have already done that in my previous class. So, all right, so I would get a little bit ahead of the game, because to keep the consistency, if you know what's coming up with paper 3 while you're doing paper 1, it's going to make it flow a whole lot better. Questions? Anybody have what questions y'all have on that? Sometimes I get talking and at the end of class, someone says, now what are we doing? He's like, okay, I probably should have started one step earlier, because I've done this so many years. I just assume everybody's with me.
To clarify, paper 3, we're just editing it for our company, correct?
Right. So this Excel model creates all your charts and graphs. You're just going to copy and paste them in, and you'll see when you look at the student example papers, like Colin's already seen this a million times. Yeah, it's hard. You might not do this part because it might not flow, but yeah, all these charts are already set up. Now, it's not a matter you're going to edit the word down and say up. It's going to be more complicated than that, because it's set up for Walmart. I have students, I've in Walmart that this was all about them buying Flipkart, and I have students that they're doing some energy company, and they say that's all because of Flipkart. I said, no, Exxon did not buy Flipkart. So they need to edit a little bit more. And you probably want to go through and do a search on the word Walmart, just to make sure you change them all, because every once in a while someone will have one. And I'll have some, I have this comment about, this is the competitive environment with the Amazon effect. And I'll have an energy stock talking about the Amazon effect. No, there's not an Amazon effect in the energy industry. So there's stuff you need to read it and see what you're seeing. And it's not that they're not smart, it's that they're so into the weeds, they just forget to look at it and they just miss it. So you need to step back at one point and read through it and just make sure, does this entire thing make sense for my company? I think I took out the last part. Let me see if I didn't, I'll take it out. I didn't. Okay, there's one thing I gotta fix that I'll take out of this. The last part, in 2 of my classes, I do this and they do the relative value as part of this paper, but you're doing relative value in 7. So I'm actually gonna take that last part completely out. So this will change. So if you load it now, you're gonna have the wrong file. So I'll take this last part out. All right, so let's look at some papers. I can't remember what I showed y'all last time. I don't think I showed you one last time. I do like Coca-Cola mainly because of the student who wrote Coca-Cola. Maybe I can get him to come speak. He's spoken to this class before. But Ryan wrote this paper. He was in this class because he wanted to do, oh, y'all like, did I miss something? Huh? Okay. Who's doing, you're doing, yeah, well, this paper's too old for you to use his. Yeah, my memory is like, I have the memory of a 6-year-old because I'm turning 60. So if I get into a story I've told y'all 2 times before, y'all can just say, we've already heard that, please. Now, if you heard it in another class, you have to listen to it again. But if I've taught it in this class, then tell me. All right, so this student, he really wanted to work as an equity sell side analyst. He was working for JP Morgan here in town on the phone answering phones. He begged his boss to let him interview in New York, and his boss said, no way, they're not going to hire you or UTSA, forget it. He kept begging him. He said, okay, I'll get you an interview. They gave him Coca-Cola. They gave him 1 weekend. Come in on Monday with the report on Coca-Cola and we'll interview you. He emailed me his draft and blew me away. It was a really good paper. And so I gave him a few comments. He went in, they gave him the job. They were just doing him a favor. They were not going to hire him, but he did what he had to do. Sometimes, Kevin spoke to my earlier class and he's saying, remember, he talked about how sometimes forget about having fun on the weekend. This is your career. You just got to tell all your friends, don't bother me this weekend. I've got to write a paper on Coca-Cola. And then he decided to do Coca-Cola for this class. So what he did, and this is really what you want to do, is you want something that looks like a sell side paper. When we do the exec summary, we're going to look at a lot of sell side reports so you can get that format. He tried his best to do that. I want to get rid of this, but I don't know how to. There he goes. I'm sorry? No, he took a weekend to write another report, which was a shorter one, but then he wrote this one, so no. But still, if I were to show you what he did on a weekend, you'd be pretty amazed. It was a very, very well-written report. Now, he was born to be a security analyst. I have had a few students. I've met with Will this summer, Will Jones. He was born to be a prop desk trader. I think when he was 7 months old, he was trading stocks. Ryan was born to be a security analyst. That's just the way he thinks, and he's done great at it. It's kind of funny. He said everybody leaves the sell side after like 2 years, but I'm going to stick to this for 3 years. And then a few weeks later, Professor, can you be a reference for me? I'm going to move to the buy side. So he's had no trouble moving around the industry. He's doing extremely well, but he made it look as much as he could, and this is similar to what y'all did in your competition. Make it look as much like a sell side research report as you can. The buy side is not this fancy. It's much messier. There's really no format. Have y'all seen sell side reports? Any of y'all have never seen one ever before in your life? So I'll show you some examples of them. But you can see, first of all, he had a color coordination. He's blue, and he kept that throughout. So he decided up front on all of his graphs, everything's going to be blues. So he wanted to look as professional as he could make it look. I do like the 2 columns. Y'all know I like that format that had me before. I just think it looks very professional. What I don't like about what he did is I just think his margins are way too wide. So this banner, I don't like the banner because it takes up a lot of space. If your margins are too wide, your graphs start getting real kind of crunchy looking. So, but it's up to you. But that's why I say, when you start your paper, you need to think a lot about format. Because you're somewhat stuck with it once you finish paper one. So think about what format you want to have, but I do not need a table of contents. You can do one if you like. I don't like table of contents. It doesn't really make sense in these type of papers. But you can if you want to. But he starts with the industry analysis. Now, for paper 3, I give you the graphs and you can copy and paste them in, but he didn't do that because he wanted his own colors and his own formatting. So he edited them all. A lot of extra work. You don't have to do that. That's not required. So you have these examples. Now, let's say some of these are pretty old papers. So here's Chipotle. I haven't seen this student in a while. I wonder what he's doing now. Really, really good student, very good writer. You can see he did not work that hard on the exec summary. The exec summary, this does not look like a sales side report. So he should have spent a little more time on the formatting. But what I like about what he did, especially on paper 1, that I think would still work well if you were doing Chipotle, is the way he discussed the restaurant industry. He did a really good job of defining the industry: fast food, fast casual, full service. He talked about the top leaders. Where would you get a chart like this? Anybody know? Where's the number one source you'd go to? Statista. Statista, yes. You could use Bloomberg. We'll talk about how you can use Bloomberg and Capital IQ. You could use Capital IQ if you know who all the leading players are. You just bring in their revenue and do a chart. But if you go to Statista, we'll talk about what's all Statista. How many of y'all never use Statista in here? Yeah, okay, it's a great source. I always have Dr. Baynot was asking me about this, about a lot about errors in the data, quality issues. I'm like, we're just learning the process. If there's errors in the data, then we're just going to live with it. Because we don't have time. In real life, that's a big issue. You need to make sure the data is accurate. But for our purposes, we're going to assume Statista did it right and the numbers are good. Because it's just, we're running out of time. There's just not enough to do. But the major players, he talks about each company. If you do that in paper 1, we'll talk about this more. I don't want just a Yahoo Finance profile of the company. If you're going to talk about the companies, you need to help me distinguish what's the difference between McDonald's and Wendy's. I actually prefer, from the discussion, I'd rather have a table. Here's the key players. Here's how you distinguish. So maybe McDonald's is predominantly franchise, or maybe Sonic is non-franchise or whatever. How you're distinguish them. Maybe it's the number of stores. You want to say, wow, McDonald's is massive, Subway's massive, but their average store size is much smaller. However you can do it to say, here's the main players in the business and here's how they distinguish these players. A Subway is what, about 1/10 the size of McDonald's typically?
I think Subway has more stores.
More stores, but they're a much smaller floor plan. So probably lower revenues, but more stores. That would be interesting. You could do things like the average ticket. What's the average ticket at McDonald's versus a Wendy's? Are they exactly the same? I haven't been. Boy, I usually think of it as $4, but I guess that's not true anymore, is it? You go to McDonald's for lunch, and what's the ticket going to be? Over $10 now? No, it's still less. I remember when I was in college, where I taught trumpet lessons, and there was a hamburger place called 39-cent hamburgers. And I thought, wow, that's a really stupid name for a hamburger place. It was, 20 years from now, they're gonna change their name or have much smaller hamburgers. But what a lot of students do is they just talk about each company. Well, then I got to read through all this about each company. Does your boss really want to read? And then they got to sit down and figure out, well, what did he say here? What did he say here? Is there some way you can summarize that to really distinguish the different companies? So like with semiconductors, I would think for semiconductors, I'd be, what are they? Do they fab? They actually building the semiconductor, or are they just developers? If the developers are fabs, what are the main products their semiconductors go into? any way you can distinguish it. So I can look at a chart and say, oh yeah, I can see here's the major players and here's how they're different from one another. So he does that, but the thing is he does it in prose. If you can find a way to do it so it's not, I can compare the companies much more quickly. But he did a good job of writing throughout. He has some good graphics. This is an older paper, so be careful with the older papers because I do change this class significantly semester to semester. So you'll see some stuff that we're going to do in our class that they didn't do in theirs and stuff they did that we're not doing in ours. So it changes over time. But you do have examples. So that Chipotle one, if you're doing a restaurant, you might find, well, I want to see how he breaks up the industry. Okay, what questions y'all have up to theirs? So we're really going to focus in on papers 1 and getting ready for 2, and then getting the data ready for 3, so you're ready for 1 and 2. There are some things in paper 3, some charts that might actually be useful in paper 1. So in paper 3, I do charts of the margins of industries over time. You might look at that and say, hey, wow, this industry's margins have been collapsing. So there is an advantage of thinking these first 3 papers together. After that, I wouldn't worry about them at all.
You answer emails for the weekend?
Yeah, anytime. Yeah. If you don't get an answer within 24 hours, I've probably lost your email because for some reason Yahoo Mail is kicking a large percentage of my student emails to spam.
Sorry, I guess not.
So I don't know why that suddenly happened overnight. And it wouldn't be too bad except for when I go to spam, there's like 300 things in spam, and
on Blackboard,
you can go through message, but it's really hard for me to check email and check Blackboard stuff. Email's the best. Text is the second best. If you do it through Blackboard, I'll get it. I don't check my Blackboard messages. It's not. I don't have a habit of doing that. So if you don't hear from me usually within 3 hours, if you don't hear from me, y'all probably lost your email. So maybe you can text me and say, hey, I sent you something. Did you get it? And then you'll know. It's not good to text me if you want to reply, because what happens on text is I see it, and then when I get home, I completely forget about it. And I never go back to it again. But an email, with my emails, I have a work file. So if I get an email that I respond to, I'll put in a work file, and I always work through that pretty fast. So I'm pretty good at responding. Actually, pretty good, really good. I had one lady in my graduate class, she texted me at 2 a.m. It woke me up, and I went through like 20, 30 texts with her for the next 2 hours. Because she was working on it right then. And so I said, okay, well, let's get it done. So I got her through the whole thing. I showed the people in the EMBA that. I go, here's her text. And they're like, you shouldn't have to do that. I say, well, that's when she wanted to work on it. So, all right. Let's see if we can. Who knows for sure what their company is at this point? Okay, Tamer. Okay, now I gotta find y'all. Give me the yeah, I can't spell that. Give me the ticker. SPSY. I can't remember now. Okay, Anthony, you're doing what?
Victor Lima Hospital. The ticker.
Oh, Valero. Well, sometimes I'll do the ticker if I can't pronounce it. VLO. Okay. Who else? You doing what? Costco. Who else? Hammer.
That is SAF. Yeah.
SAYPA.
No, SAF.
SA what?
SAF.
F.
Yeah.
PA.
Yeah.
Like that? Okay. Sorry. Joey.
Mine's Costco.
Sebastian.
Code.
Okay. And make sure on Coke you get the right one. There's Coke Bottling Company. And there's Coca-Cola. So, okay, Stefan. Okay. Ah. I see, you messed me up, Sebastian, there. There you go. All right. Colin.
RTX.
Raytheon. Juan Carlos. Okay. Ezekiel, you have a company? Pepsi? All right, who's got a decision that, okay, okay, Best Buy. See how many tickers I know. That'd be interesting. Okay, Chad, which one? NVIDIA. Okay, yeah, NVIDIA has been a popular one. Ah. Oh, sorry, guys. There are times where I wish the software companies could watch me in class. Okay, who else? Okay, Michael.
US Steel.
US Steel. Oh, that's interesting. I have no idea what their ticker is.
It's just an X.
An S? X, really? Okay. One of the oldest companies out there. Okay, Carlos. Okay, Nike's been a good one. Nike works really well. Yeah, Monster has been a popular one. I don't think I've ever, is it MON? MNST, yeah, okay. Now Carlos on Nike, when I go to Costa Rica, I do my mountain biking. I need some old shoes, so I go to Goodwill, buy 10 pair of shoes. I go in there. There was these Nikes for 80 bucks, used Nikes for 80 bucks. I found some used Adidas for 10 bucks, so I bought them, but I'm not gonna spend 80 bucks on a pair of old shoes. All right, Alina. All right, say it again. My hearing is really bad, so. FedEx, okay. I think that's just FDX. I think. All right, who else? Okay. Let's see, wait, where are you? All right, sorry. Sorry. Packer, okay, yeah, that's a good company. P-Car. All right. UPS, yeah, that's an interesting one too. And UPS is UPS, right? All right, so those that haven't selected, what are you down to? So let's start figuring this out. Gabby? Nordstrom? Oh, okay, that's a tough ticker, isn't it? Oh, you just told me JWS. I'm sure there's a history to that. JB, yeah. Jason, you gotten yours down yet? You're still thinking?
So like, I was gonna ask, you could do technology.
Yeah, tech companies work well. You just gotta be careful. Like well, I'm trying to think of a tech. Well, Apple's a good example. Apple does so many things. It's a really tough company to talk about. You can do it. People have done Apple before, but it's just, you've got several industries there at once.
What about Dell?
Dell's fairly straightforward. The issue with Dell is that they were private, now they're public, and they've lost a lot of money. So paper 3 is going to be really tough because you're not going to have much history. And they just recently, I think just the last 2 years, they've made money. So it's a little tougher now. An HP or something like Hewlett Packard, something like that would work pretty well. But well, think about it, Stefan. What? Sure. Yeah. All right, Juan, have you picked yours yet?
I was between Target and, I think it was Kroger, but I did Kroger for my last semester, so I was leaning towards Target.
They both work. Target is the positive story, Kroger is the will they survive story, but they're both interesting.
Target.
All right. Target is an interesting firm. I really thought they were done for. They had the scandal with the credit cards. And then it just like, how are they going to, you got Walmart and Amazon just taking them out. And then somehow they became the millennial favorite. I don't know how that worked. But I go on the Target and I like going to Target because there's nobody there. So I don't know how they're making money, but all right. Let's see, Robert.
So, the United States was suffered as SAF,
SAF,
RF.
RF. I can't remember what I typed in the system, but yeah, I'll look it up. Let's see, let me find you. Okay, what?
Jordan.
Darden, okay. I don't know their ticker at all. DRI, okay. Yeah, Darden's interesting because I don't know how many brands they have. They're somewhat of a holding company and they have a lot of brands, well-known brands. And so when you're dealing, so some of you are going to have firms that acquisition is a big part of what they do. If acquisitions is a big part of what they do, you probably need to bring that into paper one, not their acquisitions, but how acquisitions are affecting the industry. So there are industries that, man, they're just gobbling each other up. And so, yeah, you want to set up your paper two by bringing that up. And I don't know if Darden is still buying other brands or they're somewhat settled where they are, or they're selling off brands, but you know, it's an interesting thing to consider. Anthony.
Sir, how would I approach, let's say a competitor for Valero and QT, if they're a private company?
Yeah, private companies, you probably can't get the data for. We can see what Capital IQ has.
They have some type of. It's QT hold, or it's not a holdings, but they do have something that's on the exchange, but it's not.
Well, that's where you go to TISA and say they have data. Sometimes firms have public data because even though stock may not be public, they do borrow money in public markets and they have to file. You deal with what you have to deal with. If the data doesn't exist, it doesn't exist. So you may not. We're not doing insurance companies, but about half the insurance industry is mutuals. They don't exist in publics. You can get the data because the statutory data is available on Bloomberg, but it's tough. If they're not a public company and they're private, the statutory data is available to public companies. Getting the statutory and the private, it can be real frustrating. Same thing with banks. There's some banks that are, obviously you got credit unions. There's no data at all available there. So you deal with what you have, but TISA does find way to find some of that data sometimes. So it can be out there. A good example of banking and Navy Federal Credit, that's a huge bank, but you can't get any data on them. All right, Diego, did you decide?
Yeah, so, we'll do Costco.
Okay. We're gonna have a lot of Costco. That's fine. I had one semester where I had like 6 McDonald's going on. I got tired of reading McDonald's. It made me hungry every time I read it. All right, Dimitri, you're kind of jumped in here. So
I'm thinking Dillard's.
let's look at the data and see. Dillard's is one of those firms I'm kind of surprised they still exist. But they're still around. Have you been in the Dillard's in a while? It's still a viable and still profitable. Just make sure, and that's, I'm not a shopper, so that's part of the problem is if I go to Walmart and then HEB and that's about it, and Goodwill, so y'all can see where I do my shopping. I worry about the Dillard's and the Kohl's. I went to Kohl's once and I was like, why does anyone shop here? So I'm not understanding, and that's part of what we're after is, so if I say Dillard's, what do you think of Dillard's? And so one of the questions I ask is, I'm going to go to Dillard's, and someone says, well, why don't you just go to Walmart? Why don't you just go to Kohl's? Why don't you just go to Target? And your answer is no, because. Is there any answer other than location that you would give for going to Dillard's? Ralph, really? Okay, yeah, that's, Sears actually had that, DDS. Sears actually had that with what they're doing with Martha Stewart or whatever. So we can look at the financials and just look down and see if they're making money. So they had losses in 2021, or which is probably 2020, but it's small, only $7 billion in revenue, but they're profitable. So yeah, it looks like it would work. That'd be interesting. I am very curious about that firm because I just don't know much about them. Did we have dealers in San Antonio other than downtown? Oh, in the malls? That's the other thing with dealers is I think of dealers as a mall place, and malls are just dying left and right. So yeah, it's be interesting. We'll see. Okay, Vance. Okay, yeah.
Yes.
Len Omar.
I think it's here.
Len Mar.
Yeah.
Is that the chemicals company or?
It's a manufacturing company like.
Okay. What's their ticker?
It's LIMA and then F.
Okay. Same thing I said for who was it? Well, I can't remember what I was talking about, but timer is for non-US companies, let's make sure we can get the data. Email me to remind me of that, so I'll check. I was able to find his firm had pretty good data. One thing we were struggling with, when you do a non-US company, gotta be real clear whether you're in dollars or euros. And it's really hard to tell now because they're the same numbers. So we got to make sure on that. Bloomberg is real good on that. Bloomberg, you just click, you want US dollars and it changes everything. I haven't used Capital IQ enough to know if I'm pulling things in dollars or not. I think there's a place where you tell it you want it in US dollars, and I think I set it up like that. We just got to make sure that it is challenging. Now, if you do them, my paper 3 paper only uses the Russell 3000. So that means your company's not in there. So you need me to pull that data on Bloomberg and send that file to you. I'll have to do that for both of y'all. I won't be back. I'll be here on Saturday. So if I remember to do it on Saturday, I'll set it up and I'll put the file out there. So you won't be able to find your company because it just won't exist in the database. You can set up Capital IQ and find it in Capital IQ and get it in the Capital IQ data. There's about 10 pieces of data I couldn't get from Capital IQ. I'm pulling from Bloomberg. And so that's where you have an issue. Okay, Mari. Target. Okay. Sorry. What my hearing is. Ashley. Domino's. All right. That's an interesting one. Oh, I can remember if Domino's has an E in it. And what is its ticker? Well, I haven't looked at them in a while. D what? Okay, so, all right, Jason, you're the long standout here. All right. Terrence. Okay. Tesla is just has lost way too much money until just recently.
Okay, we can be friends.
All right. All right, so you're 1104. Okay, Micah, I don't think. Oh,
Intel uses a whole.
yeah, Intel's. Is it INTL? Boy.
INTC.
Oh, C. That's right. That's right. That's right. Okay. Chris? What are you? You're 111003. Okay. Wow, we're almost 100%. That's really good. Okay, so what I want to do is I'll put you in groups. Obviously, Coke and Monster are going to go together. I'll put you in groups. I'm gonna have to put Nike in with Nordstrom's or something. We'll see. There's sometimes why we may not have class, and instead I'll meet with your team. So we'll have to figure out when that'll work. So once we get the teams together, I'll give y'all some time to figure out when will work. My schedule is I'm probably going to not do investment society stuff on Monday and keep Monday open for this class. If Mondays don't work, then I'm here Tuesday, Wednesday, Thursday anyway. So we'll find a time. That may mean your team can't find a time except Saturday at 3 o'clock and we just do it by Zoom, which would be fine. We don't have to miss you in place. I do want to try something to fend off the procrastinators. So I want to pressure you that you see, wow, everybody else is way ahead of me, and just stress to get you caught up. This is a class where it's easy to get behind because the paper's not due for a few weeks. But if you're not spending hours every week, it's not gonna be possible. You've got to put time in every week. So you sound at the, and it's the same way in the profession. There's no one breathing down your neck every single week, but eventually you better have something to show for it. You better have been doing something. So I'll put you in a team and we'll see what that, we may not do any team things just immediately. We may do some of the team exercises in class itself. That's why attendance is really good. We got really good attendance tonight. I think we're 100%, aren't we? That's pretty amazing. So that's really good. So we can get everybody here. If you have to miss, you have some issue or you're traveling and we're going to do a team exercise, you could Zoom in and we could at least get you in that way. So, all right, Jason.
Can I do Dollar Tree?
All right, Dollar Tree would be interesting. Why Dollar Tree and not Dollar General?
What's the one that on the other side, 1.5? Dollar Tree. I think Dollar Tree, I thought that was.
I can't distinguish, and I haven't seen a Family Dollar in a while. I think all the ones around me are Dollar Generals. If you were to put me in the middle of one, I wouldn't know. I forget which one was going to start selling beef. And that just grossed me out. I said, it's gonna go to Dollar Tree to get their meat products. Color and color. And I can't even remember. I guess Dollar General is yellow and Family Dollar is blue or something like that. All right, so what should you do now? So here's what you should do. The first thing I would recommend is go to UTSA and My UTSA. And I think you can actually do the search button. Let's try the search button and just type industry research. I think she's got it set up for us. Here it is right there. You see that industry research? You click on that. Natasha has set up this website for us. That is just absolutely wonderful. I don't know if y'all know Natasha. It's usually her picture's up here, but there she is. I think I've had some students contact her. She's really good. She's like the poster child librarian. She knows how to be a librarian. She does what librarians are supposed to do, and she does it very, very well. My guess is, and I probably should ask her, I don't know if she interacts with students much, but my guess is if you called her or emailed her and say, hey, I'm really struggling finding this, I think she responds to me really, really fast. And so, yeah, I think she was, have any of y'all ever tried contacting her? She's not officially the College of Business library person. That's a different person. But she set this up for us. She even has a chat here, so you might even try that. But I would try emailing her. You can find her email. But she set up this industry research. She's giving you, like, there's Statista right there. MarketLine is a really good source for paper one. She has the industry classifications. That's going to help you find competitors. So trade associations, especially if you're doing like energy, trade associations are great. Any industry that has a public relations problem, their trade associations are wonderful. All kinds of free PowerPoints and data because they're trying to convince everybody they're wonderful. So they provide a lot of stuff for free. Government agencies provide a lot of really helpful information. That's all free because we're paying for it as taxpayers. There's even the Porter's 5 Forces. Value chain, we talked about that, value chain. So she's got some good links there. And if there's something you can't, and even down here, look, she's got dots that show you what each thing does. So it's really, really set up very, very, very well. Some of these things I've never used before. One thing to be really cognizant of, I think 90%, and maybe even higher than that, of college students completely miss this. But one thing you really want to do as an undergraduate student is find out where is the data. Especially in finance, because data is, that's your input. Where is the data? Where does it reside? So what do these different things, we're spending a fortune, you're spending a fortune on all these things she's purchased for us. And you need to be using them. You need to know what they are in interviews. What does Bloomberg have? What does Capital IQ have? What does MarketLine have? You got to know what those things are. That way, when you start at your firm and you need some data, you go to your firm's librarian and say, hey, do we have access to Market Line? And they say, no, we don't. You say, hey, can we get a subscription to it? Or like for me, I really needed, we were using SNL, which is a database for banks and insurance companies. I said, do we have this? I'll call my good friend Brian, who was the analyst for banks and insurance. Says, oh yeah, here's the ticker. I mean, here's the logon information. Yeah, we have unlimited logon at USAA. So, oh great. So I just signed in like that. I had no idea we had access to that. But if I didn't know SNL had all that data, I wouldn't have known to go looking for it. So you may work for a firm that has Bloomberg, but you don't have a Bloomberg machine on your desk, and your boss gives you an assignment. You say, hey, wow, I can get that out of Bloomberg. I've seen that. And your boss says, oh, well, they have Bloomberg machines, the accounting department. You can go over there and get the data. That's what you need to do. If you don't know where the data is, you don't know what to ask. So these are all, you want to use as many of these as you can. And then you're looking for data, you just can't find it anywhere. You could email Natasha and says, do you know of any place I can go to find this kind of data? And if it exists, she'll probably find it somewhere. So she set this up for us. It's really, really good. All the way down. I've not even looked on some of these, the value chain analysis. I'm not sure what all they have in there. They have some good links for explaining it. Here's even a Walmart one example. We'll talk a little bit more about this. What I love about these is not that you would necessarily do a value chain analysis. This is more paper 2. But you look at the list of what Michael Porter came up with, and it gives you ideas of things to explore and think about. So easy access to adequate human resources. What do you say for that for Target? Is Target having trouble hiring people? Are the minimum wage laws changes around the country? Has Biden made any progress on the $15 minimum wage, federal level? You know, those are the kinds of things you're going to ask. Well, those are the kind of questions to get. Diverse product offerings, broad set of private label brands. That's obviously very important for Walmarts and Targets. Does Target have a private label brand? They must.
Yeah.
What is it called?
I think they own that, but I don't know.
No, Walmart owns Sam's Club, but private label, like, you know, HEB has their private label. Well, then you start asking, how important is their private label to their margins? I always want to know, what's the margin on a private label versus the margin on the brand names? And what percentage of their sales is private label? I think HEB has some really good private label stuff, and they have some really horrible private label stuff. And I've learned that. I think HEB's Greek yogurt is horrible. I think it tastes terrible. But some of their meals are really, really good. So, you know, so you kind of experiment. I don't know that whole process. Sustain competitive advantages, inventory management, strong brand value, you know, these kind of things. So they give you some good ideas of how to structure your analysis, so you're covering the right kinds of things. And that's what you're really after. You're out for an edge, so you can explain this company in a way that other people don't understand it. And your boss, you know, if you really want to get your boss excited as a security analyst, you go in and say, I'm seeing this with the company. I don't think the market is understanding this. That gets people excited. You're seeing something that you don't think the market understands. How much better can you be as a security analyst? Now, how do you know the market doesn't understand it? How do you know that the market understands it and you're the one that's clueless? Well, you don't care, because you just got to convince your boss and get them to make a trade, and then hopefully they make money. So she has this set up as very, very good stuff. She has Market Line. Market Line may have some value chain management reports that you can pull on your company. What I like about this stuff, this is where I think paper 1 and paper 2 always thinking in your mind. There's stuff you're going to do in paper 2, but that might generate some ideas for paper 1. So you see, oh wow, inventory management, that's really important for Walmart. Well, what's that issue at the industry level? And you start thinking about industry issues that you want to bring in. So really good stuff. All right, y'all saw how I got to that. Industry research, and you just find Natasha's site. And if any of y'all ever emailed her with the question, let me know how that was. I might email her and ask her if that's okay to do, because I just don't know. Very, very nice person, very, very fast in responding. So very helpful. The other thing I will say is her frustration is we're spending millions of dollars on this stuff and no one's using it. And so she's emailing me, hey, we're spending a fortune on Capital IQ. The contract's coming up for renewal. Are you guys using this? So this last summer, I promised her I'm going to sit down. I'm going to spend the whole summer on Capital IQ. And I was like, wow, this is really powerful. And this summer, when I visited all of our alums, about half of them are using Capital IQ. So, well, we got to get this on our resumes. So I emailed her and said, yeah, we definitely have a use for it. It's very, very powerful. So that makes her happy that she's not spending money on stuff nobody's using. So y'all need to go out there and use these. Bloomberg's another good example of one we're spending a fortune on. Most of y'all probably use Bloomberg already. Statista is one of those things where it's just hit or miss. You just plug something in. I don't know what I just allowed, but soft drinks. You just see what comes up. Non-alcoholic beverages in the US, soft drinks in Canada. That may be a little too specific. Then you click on it and you'll see what they have. So everything takes, yeah, I don't know what I'm accepting. Markets revenues. So you just click. I don't know any better way to do Statista than that. Is you plug something in and just see what comes up. Movie tickets sold in the United States. You type in movie tickets and they'll say how many 17-year-olds attended a horror movie in the last 12.3 months. And just really specific data. Like, why would I ever need that? But you look down the list and finally you find one that says, wow, that's really what I need. And remember what we're after. Growth. What is this telling us about growth? So if you want to know how many 16 to 25-year-olds are going to the movie theaters, what has COVID done to that? Are they going to come back? How many of y'all been to a movie theater in the last 12 months? Well, you got family and kids, so it changes it. All right. So y'all are going to, why do y'all go to the movies? It's just a social event.
More of an experience.
It's an experience. It's because of the big, so it has to be special effects. If it was a non-special effects movie, would you go?
No, it's just more like sharing the home.
So it's an experience. Yeah. So that's the thing you're asking is the world changing? And COVID radically changed the world?
They started, excuse me, they started releasing movies on these streaming sites.
Right.
But you gotta pay full price for it. It's $25. Go to the movie.
Yeah, you might as well go to the theater. Yeah. I haven't been to the movies in forever.
And the drinks too.
I think the last movie I went to was Toy Story. I left the CFA exam and I was so burned out. And I said, it's part 3, a lot of writing. I had no thumb left because I'd written so much. I said, I need a movie. What's the most brainless movie I can think of? And I go, I'm going to Toy Story. So I went to watch Toy Story. But all right. So Statista has stuff or doesn't. You just gotta experiment and see what is there. Who knows? You could even type in your company name and whatever charts they have that include your company will come up, but it's just hard to know what they will or will not have. All right, so you have that site. The second thing I would do target annual report or whatever. Here's the 2021. The second place I would go after seeing what all Natasha has available, go through their annual report. And they'll, read through and just see what they're presenting, what they're talking about. A lot of this is marketing. So get into the actual 10Q. No, the actual, I can't tell what that is. Yeah, I don't like this one, but I want everything. So let me try a different one. Let's do NVIDIA. Obviously, you can go to Edgar and get these. So I'll load one next class and show you, but most firms read the introductory section, but you can somewhat skim through it. So You want unbiased information. The annual report is not unbiased information. However, firms have a section called business discussion or business overview. Usually it's pretty dense, a lot of stuff. I would go there, read through that. That's how they tell you, it's still marketing, it's still biased, but that's how they tell you who they think they are. And that's what you want to know. What business are they in? What's their most important functions? You might listen to the last earnings conference call. That might be interesting to you. That can be really, really boring. That's the kind of thing I like to do when I'm on my bike. You know, I'm riding a bike, I might as well listen to it then. I'm just curious what kind of things you're talking about. You're just trying to figure out what does management say is the most important stuff about this firm? What are they most worried about? Because that's probably what you're going to want to worry about. And I would do this for paper one. Because the issues that are most important for your company are probably the same issues that are most important for your industry. Walmart's probably worried about the exact same things that Target and Costco are worried about. So, and then we talked about the value chain and the supply chain management. If you Google that for your company, that can bring up some really, really good stuff. Value chain is really what we're after on paper two, is what does this firm do that distinguishes them from everyone else? What are they really good at? What are they weak at? Are they improving the weaknesses? Again, I thought Cinnabon business breakdown, she said they tried manufacturing and they discovered they weren't any good at that. Lost some money, got out of it. So that's good to know. They learned what they were good at, what they weren't good at, and they knew when to outsource, when to keep things in house. Those are important things. That's a lot of reading just for this first week. Let's read through real quickly. You just got a few minutes. Let's read through exactly what we're looking for in paper one. So you need a clear definition of your industry for paper one, the most restricted. So if you're doing Target, the way I think about with Target is I just start thinking about companies. So is Nordstrom a key competitor to Target? So a lot of people say no, because Nordstrom's higher end, and that would be perfectly fine. Some people would say yes. Is Kohl's a Target competitor? That makes sense. Is Walmart a competitor for Target? What about Amazon? What about Costco? You're like, if I'm not saying no or yes, but you have to decide. And paper one, the first part of paper one, if I finish reading those first few paragraphs, I should know. I should go say, even if you don't tell me, I should know, is Costco in this list? So you might even make it really obvious. I'm excluding the member services like Costco and Sam's in my definition of this industry. Okay, well, that's pretty obvious.
How many do you want, like?
Well, the number is going to depend. So if I were doing UPS and FedEx, I'd have UPS, FedEx, the D1, I can't remember the name of them. It'd be 4 or 5. If I'm doing Target, it might be a 9 or 10. It might be more. The Postal Service, you could certainly include them in your discussion. They're not a competitor as far as you're going to do financials for them, but yeah, you can include USPS in there. That the government can be a competitor in some of these industries, and you have to bring them up in discussion because, you know, USPS is what amazes me. I mean, the first time I saw an Amazon Prime truck driving by, that shocked me. Then when I saw a postal worker delivering something on Sunday, that shocked me. I know President Trump didn't care much for it, but I thought that's pretty impressive that the Postal Service is competing with Amazon now. I thought, wow, okay, I'm glad some of the Postal Service is finding ways to make more revenue. I thought that was pretty cool. So yeah, I mean, you see USPS doing daily deliveries on a Sunday. There's something going on there that's pretty interesting. That's kind of scary for a UPS. So clear to define that. It should be obvious what companies belong, what don't. You can make it really, really obvious by just saying, here's all my competitors. But you could certainly do that. What's the overview? Make up some history of the industry. Don't get carried away. I don't need, you know, in 1743, they had their first ship built or whatever, you know, it's decide how far back you got to do. Don't give me data just to give me data. We're always about the growth of this industry. It's going to help you decide about how this industry is going to grow, then provide that information. The most important one, and we're going to spend a lot of time on this on Tuesday, is the Michael Porter forces. And I really want this to be the organization of the rest of the paper. So the first part of the paper is defining the industry, who are the key competitors, its history, and then you're going to get right into Porter. And that's going to organize really everything else after that. I'm asking for 2 macro factors, but you're going to make that part of the Porters. So a good micro factor might be oil prices. For oil prices, that's a supplier for Anthony's industry. Valero buys oil, it's a supplier. Oil is a micro, what oil price has been doing, where are they going? He's going to put that under supplier power, but it's a macro. So remember, for macro, it's something that has, first of all, you can put it in a chart. It has a history. You can talk about where it is today, and then some type of forecast, which might be somebody's forecast or some quote from an industry expert, some along those times. So I want at least 2 of those. They're going to have something to do with employment. So right now, we've had some pretty interesting discussions about a shortage of skilled labor. No one's doing trucking. Well, I guess UPS. So there's a shortage of drivers. If you can find statistics on that, that would count as a macro. If you're doing anything related to, well, NVIDIA is a good example. So if NVIDIA is providing semiconductors to electronic vehicles, then a macro factor will be how many electric vehicles are there. You can certainly discuss Biden's latest law. I saw something in California that, what is about 2030, 100% of cars have to go electric. I can't believe they're going to actually get that passed. That seems pretty crazy. So macro factors can be quite a few things, but you do want definitely have charts on your macro factors. If you're not sure if it will count as one of the 2 macro factors, email it to me and I'll let you know whether I count that or not. And then other, and this is where other is just going to depend. Some industries are heavily regulated, so government regulations can be a big issue there. Some industries, accounting is really major. So if you're doing Boeing or Raytheon, you have something you're building over 10 years, revenue recognition is something you really need to talk about. That's a pretty key issue. The product cycle. Dr. Damodaran, he does a good job. He has a really good video. Maybe I should show you some of his video. He has a really good video on life cycles of companies. I don't know if y'all have seen that one before. Really good idea. He says there are some young companies that are acting like old people, and there's some old companies acting like young people, and it doesn't work. If you're old economy and you're trying to be like the young startup companies, you're going to destroy your company. And if you're a startup and you're going to try to do stuff like the old companies are, you're going to bankrupt the company. It's really, really interesting. So I'll try to find a link to that. It's a really good one. But he talks about that product life cycle. Your company needs to act like a company in its cycle. So younger companies are going to be cash short. They're going to be, it's all about growth. It's all about getting your product out there. Older companies is about a sense of getting the cash out of what you have. You're not trying to become, you can't be a young startup company heavily laden with debt. That's just going to destroy you. Older companies can be heavily laden with debt because it's got plenty of cash flows funded. So those are the kind of things I think are really, really important. And then this last one, I think about half the students don't do this at all. I need a final conclusion. What does all that you just wrote have to do with the growth of this industry? Because that's what we're after. I have some students where I read their paper and my last words, I'll leave with this. What's the worst thing your boss can say after reading your paper? So what? You got to give me the so what at the end. So what does all this mean? Your boss says, so what? What do you want me to do with all this? You gave me a bunch of data. All right, we'll stop there because we're a little over there. All right. If you're panicking, call me. I'll walk you through everything. Well, so we're going to spend a lot of time on Porters on Tuesday.